All right, everybody should see a EMD chart here. This is the mid-cap 400, $10
We
a
do.
tick, four-range chart. I wanted to show a couple of things here. Today we had news, and we had Bernanke coming on at 7 a.m. Pacific, and how you could have traded around that. Just to orient you here, on the left-hand side of this chart, this was midnight Pacific. This is going into Thursday morning. We did have a European session where we had a room open. I know they were trading. Might have got some equity trades overnight here. You see in the European session, the equities had a nice little run up here shortly after midnight Pacific. And then right before the open in the U.S., we had this little consolidation area right in here where it was kind of going sideways, market trying to absorb this higher level of support and resistance. It was hovering underneath this bottom of trading range 3/8 pivot, 980.50 on EMD here. Now, 6:30 Pacific is here. This is where the U.S. markets open. And lately, it used to be that we waited about 10 or 15 minutes, and sometimes till 7 o'clock to get into trades. But I think the big boys are flipping a switch on their computer trading a little earlier now, so we're seeing anywhere between 6:31 to 6:35, 6:33 Pacific. Market starts to have a little breakout, which it did right here. And this was actually the long trade set up when it came through the pivot. If you got filled on these bars right here, if you had a buy above the pivot, you got filled on this bar right here, and you felt a little heat. Did not take out the stop dots. This is your initial stop down in here, right, for your long trade. And then if you didn't get that one, you had another chance to take it right here on these bars right here to get long. Either entry is good. This entry, of course, didn't feel any heat at all because it immediately popped up, went into another little consolidation patch here, popped up. It was very sort of spurting up and then pulling back, and then Bernanke came on right here. This trade would have stopped out depending on the tightness of your stop, either right here at the back of the green stealthy line or somewhere right around this little pivot swing. You would have gotten out of the trade. Depending on your fill and your exit, this trade was good for about 40, 45 ticks, plus or minus a few ticks, 50 ticks if you got out at the peak here, which would have been about $400 to $500, $450. It's EMD's $10 a tick. Now, this might have been a one-and-done trade. One-and-done is where, say you have very sort of modest profit goals, $400 or $500. You pop a little 40 ticker right out of the gate, and you're done. We call that one-and-done. And then right before Bernanke came on, he started talking at 7 o'clock. Now, I want to show you something here. The beginning of 7 o'clock was right here. All right? And it looks like you could have gone short here. I know that this sort of gives you the impression that you could have shorted this, but I'm just going to show you something. 701 is way over here. All right? So you see all these bars right here? I don't know how many there are, probably 40 or 50 of them. They all printed in like a minute. 659 is here and 701 is here. So all these bars printed in like a minute, minute and a half. This was simply not tradable. It was just not tradable. It was shotgunning so fast that you could not have possibly shorted this. If you did, I don't know where you would have got filled. And if you try to get stopped out, I don't know where you got out. Yeah, Dave, this is all Pacific time. I'm here in California. Yeah, everything you see here is Pacific time down here. So you would translate these times to your local area. If you're on the East Coast, of course, just add 3 hours. This would have been 10 o'clock East Coast time. But the nice thing is that you can see here that we started to oscillate around this pivot where the breakout was from earlier, the 3/8 pivot here at 980.50. And then look how we get a nice break up here. Just a beautiful long trade set up in that circle. Depending on your buy order, you would have been filled maybe 981.10, 981.50, depending on your order in here in this circle. And this trade was actually broken into two separate sort of pieces. You had one leg that came up and hit this pivot right here. We talk about trading pivot to pivot in the direction of the trend. And then we had a couple traders earlier asking about yellow bar probes. And I'm not going to spend a lot of time sort of describing the mechanics of entry. But basically, what it comes down to is this. See how you went into this little retracement after it hit the pivot, 4/8 pivot at 84.40? See it? And then now you start to retrace, and we draw a little 45-degree angle line here, like this. And then notice how you get a higher low. So you're definitely trending up from a price action point of view. Right here, see? So you're wanting to get long. You're looking for long trades. And then notice how right here, right about in the 83.50 area, 83.60, 83.70, kind of right in here in this circle. Notice how you start to break up through this retracement line. This is called a yellow bar probe retracement entry in the direction of a trend. This was sort of a little micro uptrend you had here. See it? It popped in here, and then depending on your entry and exit, this was good for maybe about 20 ticks, plus or minus a couple of ticks. And this leg here was good for 81 to 84, about 25 to 30 ticks. So here you had another 40, 45 ticks, 40, 45 ticks over here. So altogether, you know, if you took 3 trades, you didn't have any losers. You avoided this shotgun after Bernanke. You just stayed out of all that, right, until it settled down. Popped in, took another long, yellow bar probe, another long, and now you're done. Now, you wanted to be done. If you took any of these trades and you were green, we started saying, be careful because you're going to get some chop. Now, let's see what happened after this all started to settle down. Let's look at what's going on right now. All right, here's right now. And, you know, we call this the yellow bus, and the yellow bus means that you've got, you know, support down here. You got resistance just above the pivot, and see how it's just kind of chopping sideways. So, I mean, you could make the case that it's trying to pop up all the equities. Cash markets are strong. Dow's still up 35.5, butting its head up against that 13K mark. But, you know, you can see this is pretty tough to trade in this chop here after you had these moves. So that's why we say, you know, one and done, or the other term we use is nicely green, turn off the machine. Seen too many days where traders are up $400 or $500, $800, and then they get in the middle of this chop, and next thing you know, you're giving it all back, and you're down $300. You don't. That's not a good trading session. You want to try to avoid doing that. All right, good. Well, overall, this turned out to be a decent morning. I was surprised. I have to say that when we were looking at the pre-market consolidation here in this box over here, I was concerned that we were going to get, you know, spend the most of our day chopping around in here, but we did get some breaks, and you did have a couple of trades set up here. You know, I'm going to keep the recap this morning to this one chart. I have a couple other charts, but you know, the Russell TF, YM, Mini Dow, and NASDAQ, of course, NQ, both those guys $5 a tick. Charts look very similar to this, although NASDAQ was a little more sideways because it had run up. Of course, Apple hitting fresh highs, still up at $5.40 a share. So, you know, that tends to push that NASDAQ market higher almost every day now. But anyway, that's how you would have traded this morning on the equities, particularly around the news and Bernanke talking, and staying out of the shotgun right when he starts to speak with Congress. Any questions on the recap here? Questions on the recap? I think that's it.